Where does that make sense? If you like, a million a year, 10 million a year, 100 million a year, like where does that sort of like, where would you say, okay, at this level, do this, at this higher income level, let's do, all the above.
I mean, I think anybody in the high net worth category, or anybody who's in the one, two, even the 5%, top 5% of income and assets. If you're over four or 500,000 in income, depending on the character of the income, capital gain investment or whatever. I mean, you are with the net investment income tax, and where I am in California and federal tax, you're paying more than 50%, 50, 51, 51 and change in percent of your income in the tax burden. I mean, anything you can do to carve that down is going to make sense. At that, I mean, anybody, a W-2 earner, no, but anybody who's got any sort of significant cash flows from different industries, or different operations, different activities, all those cash flows really, again, big numbers are made out of little ones. If there are, a handful of companies that are owned, different cash flows, figure out how to chisel all those down by 1, 2, 3, 5%. You're going to get under that 50%. You're going to end up with some sort of tax savings that is going to make difference. And as the numbers get bigger, the tax savings obviously get bigger. So there's a certain threshold. I'd say anybody in the 500,000 income range, anybody who's got significant investment income, it's worth looking at how you structure that and how you set that up in a way that's going to have long-term value overall.